Welcome, everybody, to our second Benjamin Capital Investor webinar. My name is Joe Bettag, the CEO of Benjamin Capital, and your host today, and thank you for attending. We've managed two earlier NPL REO funds from 2014 to 2017, and another one from 2022 to 2024. We're raising capital now for our third fund as we speak. Many investors look at the fund as a hedge against other investment holdings, while others are looking at hard assets being purchased at substantial discounts, and others want around 20 to 25% exposure to alternative investments while looking at their total investment holdings. The data we look at indicates we have a perfect storm coming. 5 years of fiscal and monetary extended pretend is coming to an end. I'd like to bring up the case study here that we're discussing today. Hopefully it's going to be a little bit larger to be able to see it. Hey, there you go. So this was a completed bank foreclosure, also known as an REO, which stands for real estate owned, which is a banking term used in the industry. We purchased this REO in May of 2022, and the collateral or the real estate that supported the mortgage was in North Augusta, South Carolina, which is about a 10-minute drive outside the city, and close to the well-known Augusta golf course right across from the Georgia state line. The home was on a 1.92-acre lot and needed substantial renovations. We purchased this REO directly from the bank for a little over $78,000 and had a little bit over $16,800 in expenses for a total cost basis of a little bit over $95,000. During the due diligence period, before we purchased this REO, we selected an experienced REO broker, which is part of our national REO network, and we had already determined the value of the asset and determined the value the asset was vacant. We hired a local attorney that confirmed that the mortgage assignments were recorded so we could foreclose if needed, as well as running a lien report, title report, and review the mortgage and notes so there were no surprises. This is part of how we manage risk, and with local experienced boots on the ground REO agents and local law firms for title. I learned the importance of having the best REO broker agents in each market while working as an REO sales manager from 1997 to 2002 for Ocwen, who was the largest purchaser and servicer of distressed mortgage debt at that time. The quality of the REO broker agent created a better outcome of 5 to 10% compared to my peers at that time. This is money well spent before we purchased an NPL or REO and helps us to avoid costly mistakes that can really hurt your portfolio returns. During the due diligence process and before we closed on purchasing this REO, I asked the local REO agents to start identifying the best type of buyer for this property, and it was probably going to be an investor looking to renovate and flip the property. We'd already sent in the broker price opinion, or the agent had sent in the broker price opinion, also known as BPO. So we knew what his as-is and repair values were with the projected costs and renovation costs. During that discussion, he expressed an interest in buying this REO from us directly to repair and flip. He did not know what our cost was to purchase was going to be, and he offered what we saw as a fair as-is price from a risk-reward standpoint, especially when we needed to we needed to hold this asset for a short period of time that would increase our returns when the time value of money is considered. We sold the REO after holding this asset in June of 2022 for $114,800. And as you can see from the case study, our holding period was 17 days. Our net profit was close to $20,000. Our return on investment was 20.32%, and our internal rate of return was 57%. During our first case study that we discussed a few weeks ago, we spoke about the difference of return on investment versus internal rate of return, also known as IRR. This is a great example of that difference when you factor in what the internal rate of return measures, which is the analyzed return when the length of time is part of that equation. In this case, when no length of time is looked at when using the return on investment, it is at 20%, 20.32%. But when the actual time in holding that asset, what I like to call the time value of money, that internal rate of return is at 57%. Why is this important to investors? We can turn over that investment capital 3 to 4 times to compound our overall rates of return on our 4-year funds as we take our profits at the end of the 3rd year and wind down the fund during the 4th year. This is why we can project an 18 to 22% internal rate of return on a passive basis to our investors, as this has been based on our first 2 funds since 2014. If you want more details on what the differences are for return on investment versus internal rate of return, we go through that explanation in more detail on our first case study that can be found on our YouTube channel. Look for Benjamin Capital Group. This was a relationship-based acquisition. That is what we look for. We look for more quiet, below-the-radar deals that are smaller than the Wall Street guys don't look at, and where our deep experience in how to navigate the best loan resolution strategy can create the best value-added outcomes. Wall Street trades the paper. We resolve the assets for better profits. This is an example of why 40+ years of experience makes a difference. You can make money when you buy assets like this at the right price and not when you sell. For those that want to take a deeper dive, we also have a series of white papers that we created that discusses various aspects of distressed real estate debt regarding how this opportunity has been created and why the timing is right. The white papers can be found at our website at www.benjamincap.group.com. If anyone wants to learn more about how we make money and why the timing is right for this type of investment, once again, our website is www.benjamincap.group.com. You can also follow us on LinkedIn, Instagram, Facebook, Substack, and our own YouTube channel. Look for Benjamin Capital Group on all social media. Thanks for attending, and we hope this was informative. Thank you.